In today's video, we're going to be looking at the Lombard Credit and Loan Guide. Now, if you're looking to access Lombard Credit, well, congratulations, you've stumbled across one of the oldest secrets in the banking world. In fact, as you'll learn in this video, Lombard Credit predates modern banking and has been used by some of the wealthiest families in Europe for over 500 years. Now, you might be asking yourself, what is Lombard Credit? Well, Lombard Credit is asset-backed financing which is collateralized against liquid investments. Such collateral often includes stocks, bonds, exchange-traded funds, and life insurance that is already in custody of the lending bank. This arrangement, known as Lombard lending, can result in favorable interest rates for clients. In this video, we're going to explain how to access Lombard Credit. We'll also discuss who should be using Lombard loans and share some examples of when Lombard Credit actually makes sense. But before we get started, make sure you hit the subscribe button and the notification bell so you get alerted every time we post new non-resident banking opportunities. Now, to help you better understand the Lombard credit loan process, we have a free non-resident banking starter guide. It's designed to help non-resident and foreigners open bank accounts all around the world. So don't forget to download your copy using the link in the description below. Now, one thing you might not know is that Lombard credit predates modern banking. In the West, it traces its roots back to northern Italy in the 12th century, a region known as Lombardy. Here, the Franciscan order of monks was permitted to engage in Lombard lending, allowing them to circumvent the restrictions imposed by the Vatican on charging interest. Over the following centuries, goldsmiths, bankers, moneylenders, and pawnbrokers originating from Lombardy arrived in major European cities, and they set up their pawnshop-style institutions, expanding their trade and laying the groundwork for modern banking. In many major European cities, such as London, Paris, Dublin, and Hamburg, important streets still carry the name Lombard, marking the place where these early financing outfits first set up shop. So it's really no surprise that this 500-plus-year-old practice still continues today, and it's still practiced by some of the most oldest and most well-established banks across the world. Likewise, it's not surprising that wealthy families continue to use Lombard credit as a tool in their banking arsenal to make the most out of their financial relationships and increase their personal wealth. Now, let's take a look at when you should consider using Lombard credit and who should use Lombard credit. Interestingly enough, it's not just for the super rich. So, first things first, how do Lombard loans work? Well, before diving in, it's important to have a solid understanding of how Lombard credit or Lombard loans actually work. Now, as we've shared already, Lombard credit refers to borrowing from a bank against other investments, or collateral. While this may sound a lot like a standard mortgage, it's not. To this end, we'll discuss the specific differences between Lombard loans and mortgages in just a minute. Now, with a Lombard loan, banks typically have or take custody of other liquid assets. Such collateral often includes stocks, bonds, exchange-traded funds, and life insurance. Now, in some cases, this can also include less liquid investments, but that usually requires a strong pre-existing relationship with the bank. Now, in most instances, because the bank has custody of the collateral, which in most cases can be converted quickly to cash in the event of a default, the borrower usually can obtain favorable interest rates. Additionally, as we'll discuss in the next section, most Lombard loans are provided on a fixed basis. This means that at the end of the Lombard term, both the bank and the borrower expect the loan to renew. Now, you might be wondering, when should you use Lombard credit? Well, in this video, we'll discuss Lombard credit as it relates to the needs of private banking clients. We'll save any discussion about interbank Lombard facilities for another day. Now, generally speaking, Lombard credit refers to borrowing against your assets. But unlike taking out a mortgage on a fixed asset like a house or vehicle, Lombard credit is typically tied to liquid cash-like investments and is available on a revolving basis. This can include investments such as stocks, bonds, exchange-traded funds, other portfolios, and even life insurance. Of course, each bank has its own policies for what they will and will not accept. So why would you use Lombard credit? Now, you might be wondering why someone with liquid wealth would ever want to use Lombard credit. Well, there are countless situations where a private banking client may find themselves wanting to access Lombard credit. For instance, if you're interested in making a new investment or a large purchase, you might need to liquidate a portion of your existing investments to afford the purchase in cash. Instead of cashing out, you could consider Lombard credit as an alternative option. This is especially attractive since selling existing investments could result in losses or capital gains tax. additional transaction fees, and the opportunity cost of not holding your existing investment long term. Instead, you can use Lombard credit to leverage your existing portfolio to unlock additional financing at favorable rates. And at the same time, you eliminate the negative consequences of selling any existing investments. Now, you might be wondering, what are Lombard loans' interest rates? Well, since Lombard credit is collateralized against existing liquid assets, the rates that banks charge are often very attractive. This makes sense for a number of reasons, especially since the assets held as collateral are often already in the lending bank's custody, whether directly via bank products or indirectly through the bank's investment arm. With this in mind, let's consider a few factors impacting Lombard loan interest rates that prospective borrowers should know. Lombard loan interest rates are a combination of the bank's cost of borrowing, otherwise known as the interbank rate, and the bank's margin for providing the service. Next, most bank margins are in the range of 1 to 3%, depending on the bank, the country they operate in, and the currency that the client is looking to borrow. Next, as with all private banking services, Lombard loan interest rates are negotiable, and the client should push for terms that suit their financing needs. And while maintaining existing relationships is usually less disruptive, borrowers may be able to obtain better Lombard loan interest rates if they approach new banks with the prospect of moving their investments there as well. Additionally, by extending Lombard credit to clients, banks are able to simultaneously encourage clients to purchase additional securities, invest in other bank products, or use other forms of bank financing, resulting in higher commissions and transaction fees for the bank. So, it's also in the bank's own interest to ensure that the Lombard loan interest rates are attractive to clients. Lombard loans help both the bank and the client make more money. Now, what are the benefits of Lombard credit? Well, like all financial products, the benefits of Lombard credit ultimately depend on the individual accessing the service. Likewise, one of the main catalysts which will determine how beneficial Lombard credit can be is the reason why someone is accessing the Lombard facility. That said, there are some general benefits that most borrowers are looking to access when obtaining Lombard credit from their bank, including immediate access to additional capital without liquidating investments, flexible use allowing borrowers to take advantage of many opportunities, providing liquidity in times of cash shortages or uncertainty, favorable interest rates compared to traditional loan facilities, flexible loan to value rates based on client needs ranging from 15% to 90%, available in most major currencies to suit borrower requirements, and flexible terms and available on a rotating basis for continued access. Of course, just because these benefits are of interest to you doesn't mean that you should use Lombard credit. With this in mind, let's take a look at who should actually consider Lombard credit. So, now that you know what to expect when it comes to Lombard credit, let's discuss who should consider Lombard facilities and whether it's a good option for you. First, as we've already mentioned, you don't need to be super rich to access the benefits of Lombard credit. But you will need to have some money. After all, this is predominantly a service offered to private banking clients who already have existing portfolios. Now, for this reason, Lombard credit is best suited to those clients who have an established relationship with a private bank and have a liquid investment portfolio, or those who are able to establish a relationship with a private bank by making a sizable deposit. This typically requires at least $1 million starting out. But in most cases, private banks want to see between 3 and 5 million US to get started. And in all cases, if you're specifically interested in Lombard credit, make sure that the bank that you're considering is able to offer this to you. This means confirming the bank's specific requirements and also ensuring that the bank is able to use the type of collateral you have to facilitate Lombard credit for your intended purposes. Next, let's look at the Lombard loan versus a mortgage loan. Now, a common misunderstanding among prospective borrowers involves the pros and cons of a Lombard loan versus a mortgage loan. In fact, in some instances, many people approach Lombard loans as a form of reverse mortgage. But this isn't accurate. Unlike a mortgage, Lombard loans require the borrower to hold liquid or cash-like assets. This is in contrast to mortgage loans, which are often determined through a combination of the underlying value of a fixed asset, like property, and the borrower's ability to service the loan. In reality, Lombard loans are tools that enable clients of private banks to make more money, enabling them to leverage existing investments without the need to liquidate their existing holdings. Likewise, they enable the bank to do the same through interest payments on investments that they are already holding custody. Not only does this help both parties increase their economic prospects, it also builds a stronger and longer-term relationship between the bank and the borrower. Sometimes that is too often overlooked in private banking today. Now, what are some of the risks associated with Lombard credit? Well, like any financial transaction, there are risks involved. And before deciding to access Lombard credit facilities, you need to understand how these risks could impact you, your current investments, and future acquisitions. Naturally, as with any asset-backed credit facility, you could lose the assets that you put up as collateral if for any reason you are unable to meet your payments. Additionally, since Lombard credit is loaned against the value of the collateral, you can expect the bank to demand additional collateral if the value drops. For instance, a loss in value of your securities below the agreed upon loan to value of the credit facility. This is known as a margin call, and it's especially important to understand during times of market volatility. Now, with this in mind, before using Lombard credit, you need to make sure you understand all the associated risks and what you stand to lose. So, make sure to speak with a qualified advisor before making any decisions. So, are you ready to access Lombard credit? If you want to know which banks offer Lombard credit, what their minimums and rates are, what types of financing strategies are available to you, and how to get started, we can help. All you have to do is join GlobalBanks Insider. With GlobalBanks Insider, you'll get instant access to our entire archive of banking intelligence reports, access to the GlobalBanks database, home to more than 250 banks from 50 plus countries, including detailed bank profiles, client preferences, and a whole lot more. Finally, you'll get real-time analyst support from our team of experts, ready to answer your most pressing banking questions and to make suggestions on which banking strategies will work best for you to meet your objectives. To get started, just click the link in the description below to learn more about GlobalBanks Insider. And before signing off, don't forget to hit subscribe so you get alerted every time we share new banking opportunities. Thanks so much for watching, and I'll see you next time.